Welcome all of you. It's fantastic to be joining you for this, which is our 2024 Macquarie Australia Conference, is our 26th conference. For us, it's a great privilege to be bringing together capital, the custodians of capital from Australia and around the world, to hear from leading businesses in Australia on how they're seeing things and what's happening. And this year we apparently have a record 117 participants. As we go into this year, we've been through in previous sessions, recent ones, pretty colourful backdrops in terms of what's going on. We all went through the pandemic, something that we'd never experienced in any of our careers, I'm sure. And coming out of that, then we had massive fiscal and monetary stimulus, and because the economies opened up quicker than we expected, which was a great thing, we had huge inflation surge, and now we've had the rising interest rates. So we're going into an environment, having been through very colourful years recently, where the outlook was, well, what happens as we come out of all of this? So I was going to chat to you about a few of the things playing out in the world at the moment. One is the economic backdrop. The other one is technology and the huge next round of disruption coming from that for just about every sector we operate in. The third one is decarbonisation, which we Macquarie play a big role in, but again, it's going to be impacting a lot of the companies you hear from. And the last one this year is a little bit about global elections and geopolitics. We've got 64 elections happening, which is the highest that we've ever had in a year around the world. And not only do we have that happening, but we have all these four things playing out together. So it's a lot going on at one time. We've come through this period where central banks had to respond with rapidly increasing rates to try and rein in the inflation we were all experiencing. And that had us all nervous about global growth and whether we were going to face recessions all around the world as we were meeting previously. Now, what we're seeing actually is, despite Europe being in a mild recession, some parts of the world being in mild recessions, and Australian growth really slowing, generally growth has been resilient globally. And certainly the really big economies of the US, China, India have all been growing quite strongly for different reasons for each. But that has meant that growth has stayed quite strong. That means while we don't know the pace at which central banks are going to start cutting rates, we've got RBA meeting today, we've got Powell at the Fed saying they're not going to be hiking, but the views on rate cuts vary. The fact is that we are getting more confidence and certainty in where rates are going. So we're through that period where they were just rocketing up the fastest in decades. And what we're seeing is that's giving the market more confidence, which is a great thing. We're certainly seeing M&A volumes start to pick up, and in the ECM area, some IPOs start to happen. There's a lot of liquidity waiting to participate, but people are waiting for the price discovery yet in terms of where we settle on transactions. So it feels like the period where people sat back out of the markets and were cautious because of the change is starting to end, and all the US banks have reported pipelines picking up. We're certainly seeing that as well. Technology is driving another whole step up in terms of what's happening with AI, etc., productivity, structural change for just about every industry. Now, initially, it's playing out really in the tech companies and in the US, where we're seeing big tech IPOs again. People like Reddit, the UK chip maker ARM Holdings has listed there, and it's really been the Magnificent Seven that have driven the US market over the last while, and that's where AI is really playing out. At Macquarie, we're taking it in a very measured way. So we've got developers using GitHub Copilot, really having a very good experience with it, looking at how we can use it for automating and for code, etc. But also we're across huge pieces of information using it to do a lot of analysis in research in equities and areas like that. But we're having to be really cautious with guardrails as a regulated organisation, and one that has sensitive information of vulnerable customers. But I think for us, one of the big places it could have impact is in data and in clean energy, because the requirement for data centres and things is going to be massive amounts of data. The training of ChatGPT requires huge amounts of energy. So these are sectors which are going to structurally grow a heck of a lot, and we're putting a lot of effort into that. Governments used to be the big off-takers for new renewable projects we did. Now we're finding corporates, especially tech companies, signing up very big deals, but other corporates as well for renewable energy. Then turning to decarbonisation, that also is another structural change that is in an early innings, just like the AI impact. We've been investing for 2 decades in renewable energy, but we're still early stage, and the IEA's forecast is that we need $4 trillion a year of investment out to 2030 to meet the net zero ambitions we have. Here in Australia, the government's made the commitment to the 82% reduction by 2030, and it's really up to governments to set those targets and set the frameworks on how they want to have their glide path. Malaysia, for example, is solar, the Philippines is offshore wind, so different people using different mechanisms. France is nuclear. Here we've got the Capacity Investment Scheme, which is drawing investment and setting a framework for firming and renewables. We've got the Safeguard Mechanism, which is impacting the largest emitters if they're going above minimum emissions in terms of disincentives. We've got EV standards, etc. So Australia is moving. We had the big Victorian offshore wind tenders that were done, in which we were fortunate to win one of the 6 awarded. So things are starting to happen here, but here as well, still a very long way to go. We're going to have a lot of structural change in this decarbonisation response. Having said that, we're going to also have to focus on what are the transition fuels. So things like gas are going to have an important role and lots of implications over the next while. And then turning to the last point I had, which is on all the elections happening around the world, 64 of them. Regardless of the election outcomes, all of these governments are going to be facing similar issues where debt to GDP is up a lot, so they're under fiscal strain, interest rates are up, and they're still having to fund a lot of social programs. As we do here in things like housing, we have a massive shortage of housing that requires real structural change in response. Areas like health, areas like education, all needing investment with a very challenging backdrop. But also the themes I talked about in terms of technology, digitisation, the decarbonisation, all of these things are things that the government's going to have to think about regardless of who ends up in power, and really important for us as a private sector to partner with them in trying to deliver the community outcomes that are needed and create extra value that then lets our businesses and our shareholders participate in it as well, and the stakeholders behind our shareholders, the investors in the community.